Ladies and gentlemen, welcome. Opening with a big question. If the world changes faster than your portfolio, are you truly investing, or are you simply reacting? Today, we stand at a moment unlike any other in financial history. Markets are evolving, technologies are accelerating, and global dynamics shift with every passing quarter. The strategies that worked yesterday may not carry us safely into tomorrow. So the question is, how do we build a portfolio strong enough to withstand uncertainty, yet flexible enough to capture opportunity? That is what we will explore together. Part 1: The New Reality of Investing. For decades, the traditional portfolio was simple. 60% stocks, 40% bonds. But in a world shaped by rapid technological innovation, geopolitical transitions, demographic shifts, and globalized capital, that model alone is no longer sufficient. Today's investors face new challenges: rising inflation and unpredictable interest rate cycles, technological disruption reshaping entire industries, global supply chain reconfiguration, increased market volatility driven by real-time data, a digital economy expanding faster than policy can catch up. This era demands not just a diversified portfolio, but a future-proof one. Part 2: Principles of a future-proof portfolio. A future-proof portfolio is not a prediction, it's a preparation. It rests on 3 fundamental pillars. 1. Resilience. Your portfolio must endure shocks, economic, political, or technological. This requires a balance of asset classes that do not all move together. 2. Adaptability. The ability to evolve as markets and technologies evolve. Investors who stay static fall behind. 3. Opportunity capture. The future is full of high-growth sectors, but only for those willing to see beyond the familiar. A future-proof portfolio positions you not only to protect wealth, but to grow it. Part 3: Core building blocks for 2024 and beyond. Here are the strategic components every modern investor should consider. 1. A strong core of equities, with sector rotation. Equities remain the engine of long-term growth, but not all sectors are created equal. Going forward, the most resilient sectors include artificial intelligence and automation, clean energy and electrification, biotechnology and healthcare innovation, cybersecurity, semiconductors and digital infrastructure. Sector rotation, shifting allocation as trends evolve, will be essential to long-term performance. 2. Quality bonds and fixed income instruments. Despite recent volatility, fixed income still serves a vital purpose: capital preservation, income generation, risk balancing. The key for the modern investor is flexibility, mixing government bonds, high-quality corporate debt, and short-duration instruments that adjust with interest rate cycles. 3. Real assets, tangible value in a shifting world. Real estate, commodities, and infrastructure continue to provide inflation protection and diversification. In a world of rising prices and shifting supply chains, real assets serve as an anchor of stability. 4. Digital assets, the frontier of future value. Digital assets, when approached carefully and strategically, can enhance diversification and capture future growth. These include cryptocurrencies, tokenized real assets, blockchain-based financial products, digital infrastructure investments. They should never replace core holdings, but they can complement them, offering exposure to the digital transformation shaping global markets. 5. Cash reserves, optionality is a strategy. Holding cash is not a sign of weakness. It is a sign of readiness. In uncertain markets, liquidity allows investors to act decisively when opportunities appear, rather than react fearfully. Part 4: The Human Factor, Mindset and Behavior. Even the best portfolio fails if the investor behind it lacks discipline. A future-proof investment strategy requires long-term thinking. Wealth is built over years, not weeks. Emotional control. Markets test patience. Successful investors stay grounded. Continuous learning. Financial landscapes evolve, so must our knowledge. Purpose-driven investing. A portfolio is not just numbers, it is a tool to build the life you envision. Part 5. A blueprint for the next decade. So, how do we bring all of this together? A future-proof portfolio for 2024 and beyond should include a diversified core of global equities and quality bonds, strategic exposure to innovation sectors, allocation to real assets as an inflation hedge, measured participation in digital asset ecosystems, a liquidity buffer for flexibility and opportunity, a mindset prepared for rapid change. This is not a rigid formula, it is a dynamic framework designed to evolve with the world. Conclusion: the future belongs to the prepared. Ladies and gentlemen, the future is uncertain, but uncertainty is not the enemy. It is the invitation. To invest is to believe in tomorrow. To build a future-proof portfolio is to take responsibility for that tomorrow. So I leave you with this challenge. Do not ask, what will the market do? Ask instead, how prepared am I for whatever comes next? Because the investors who thrive in the years ahead will not be those who predict the future, but those who prepare for it. Thank you.